Welcome to another edition of Outsider Club's Chart Wars. I'm Brit Ryle. This is my colleague and good friend Christian DeHamer. We call him the Hammer. And once again, we're going mano a mano with two charts. I'm giving Christian the first punch again. Christian, let me have it.
The world's gone crazy, Brit. And when the world goes crazy, gold goes up. Right now, we have a hot war between the two largest economies on Earth. The third largest economy, Japan, is seeing its carry trade unwind. And Germany, the fourth largest economy, is stagnant again with a 0.1% GDP growth envisioned for 2025. That's pathetic. It's no wonder that gold has broken out into a new channel. Let me share this chart with you. As you can see, we're broken into a new channel, and that'll go higher from here. That's extremely bullish. Now, what you want to do if you want to own gold companies is you want the companies that are unhedged. Gold loves cheap oil and high prices, right? So if you're a miner, you pull one of your major expenses is the price of oil. Oil's got a 60 handle now, and so it's very cheap. And the price of gold is at 3,000 over 3,300, and with a lot of projections, it will go to 3,700 this year, and some even wild projections going to 10,000, whatever. But if you're an unhedged gold miner, you're printing money in these situations. Your costs are going down, and your sales are going up. There is an index called the ARCA Gold Bugs Index. Its symbol is HUI. It's an index, and it lists all the companies that haven't, all the gold mining companies that have less than 1.5 years of production hedged. And I went through those 14 companies that they list, and I found the one I like the most. And I call it I Am Gold, or it calls itself I Am Gold. IAG, it trades in New York. It trades IMG in Toronto. Now, if you look at this chart, you can see it. It's in a nice bull market, higher highs and higher lows. It consolidated for the past 6 months or so, and then just broke out. This is a middle of the road $4.5 billion company. So it's not a junior, it's not a small cap. They're going to be around in 10 years, but you have more upside than the big companies, the $60 billion companies. Now, the deal is this company just completed a mine, getting it ready for production. They're looking at increasing to 90% throughput by the end of the year. The revenue for the past 12 months were $1.63 billion. At the end of this year, given that gold remains above $3,200 an ounce, you're looking at between $2.35 billion and $2.56 billion. That's a 55% increase over last year. And you can look at the chart, no wonder we broke out here. I love it when you have a consolidation pattern and a breakout. That's one of my favorite patterns to trade. You watch it pull back about a third, and then you go all in, and it'll just continue to run. And that's what I got today. I am gold. IAG.
That's a good one. What a huge amount of like revenue growth. That's awesome. Okay, Christian, I am interested in bottom fishing, beaten down tech stocks that have very little supply chain exposure to China and have contracts that allow them to pass any tariff costs on to their customers. And for that, I present you with Symbotic. SYM is the ticker. It's a warehouse robotics company, and they outfit warehouses, fulfillment warehouses with automation. You can think of their particular system as a warehouse roller coaster. There's tracks that run along the floor and up and down the shelves of the warehouse, and they have their bots ride the rails, um, gathering and delivering products that for unpacking and packing pallets as they come off trucks and as they go back on trucks. It's a really cool little system. Symbotic has a $22 billion backlog. 25% of that is based on its contract with Walmart to outfit its warehouses with its robotic systems. And that means 400 warehouses that it will be outfitting with its own robotic systems. It has completed 29 of those at present. It has a lot of runway as it ramps this up. It's also going to be working with Walmart's Mexico operation, Walmex, and they just bought Symbolic rather, just bought Walmart's robotics division, which tells us that this relationship with Walmart is really just locked in. The company posted 35% quarterly revenue growth in its last quarter to $487 million. They started 4 new systems in the quarter. The quarter before, they started 9. So there's that number varies a little bit from quarter to quarter, but there's still steady progress. The company does generate recurring revenue from software and maintenance of its systems. That number was up 80% and will grow as it completes more systems. Its recurring revenue will rise as well. The software margins for recurring revenue run about 65%, which is fantastic. Hardware margins are under 20%, which is pretty typical for anything that's hardware related. The most important metric for Symbotic is their cash from operations. They are like a cash machine. In the last quarter, their cash balance grew from $727 million to over $900 million. The company generated almost $200 million that they could put right in the bank, which is just fantastic. Fiscal 25 will end in June, and revenue is expected to be $2.26 billion. Fiscal 26 revenue is supposed to grow to $3 billion, which is really nice growth. It's going to continue to grow as it runs through its backlog. Market cap is $12 billion. Christian, as you can see on this chart here, we may be in the process of completing a double bottom for the stock, from back in September and then just the recent sell-off. The stock has recovered really nicely from those lows. The tariff policy announcements and that kind of thing really haven't affected it for the last 8 days, which is pretty good. The stock looks like it's stabilizing. It is below its 50-day moving average and its 200-day moving average, but a lot of stocks are, just due to the general volatility that we have seen in the market lately. You can see the stock right here at $20. There's a pretty easy move to 23, 15% move. And I would not be surprised to see something in the upper 20s over the next couple months. The 27 level is a pretty good target with outside shot, maybe at 31. The stock has been $40 in the last, 6 months, and its all-time highs are up around 60. So there's definitely upside for this stock. And I think as maybe, the news flow settles down a little bit, people might start to, reevaluate beaten down tech stocks, and this would be a big winner there. And that's what I got for you, Christian. Symbotic.
Looks good. I like it.
All right, man. Thanks, everybody, for tuning in to Outsider Club's Chart Wars. Once again, I'm Brit Ryle. This is Christian, the Hammer, D. Hammer, and we will see you next week.
Hey.